Anyways, hey, good morning, everyone. Tuesday, July 31st, 2018. This is your daily Forex trading strategy session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk when you cannot afford to lose. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. I do these sessions every day with the overriding goal of helping you put together trade plans. We pick 7:30 in the morning because it's a couple hours before the stock market opens in the United States of America. It's also approximately London lunch. So it's a good opportunity for us to get together as a community and share ideas. If you are new to these webinars, and you like what you see and you're like, holy smokes, this is awesome, don't be a lurker. Please show your loyalty and respect by visiting TradersWay.com and opening an account today. And today is what, day 9 of me being sick? Yay! My wife's even worse. So anyways, I'm the lucky one. So I'm lucky because I have you in my life. Let me share my screen. Okay. Full screen share. Boom. Shalaka laka. All right. Can you guys see all the pretty colors? Okay. Yeah, right on. Awesome. We are so lucky and fortunate to have this opportunity to be together. All right. This is where we left off yesterday. I had a theory. I said, hey, I have a theory. And we talked about this to this. Okay, you can tell because I drew this giant thingamabobber. Then what was the second part of this theory? By the way, you're welcome. 75.5 to 76. It's only 50 bips. Now what? What was the second part of this theory on the Kiwi yen? Besides paying the bills. Possible counter trend trading. There might be. I'm not saying there will be. There might be, there could be, especially if you're a bear already. We talked about it yesterday, going from low to high. And then if it got here today, which it has, then you can look for a counter trend trade. It's not that it will happen, but if it does set up, you have permission to take the shot, especially if you're already a bear. Okay? Remember, amateurs make trades because they look at it, they're like, oh, that, oops, because they're like, oh, look, it's a trade. A professional has a pre-established bias and is waiting. So if you're already bear, you're like, okay, well, the double top's here, I have to take a shot. Yeah, that makes more sense versus just taking it because you're like, oh, I think it's going to go down. And then, 2 hours later, you're like, oh, I think it's going to go up. And then you're like, oh, I think it's going to go down. And if you're like that, you'll always be late. Yes, and I can't quite see the chat very well. Wesley says, especially because it's Tuesday. And yes, that is correct. If it was Thursday, I would not suggest such a thing. But, oh yeah, look, I already drew it. Cool. Yeah. Cool, right? You're welcome. All right, all right, you guys, that's it. I'm out of energy. A lot of energy. All right. Aussie. So I put together a monthly plan for you and a weekly plan and so on and so forth. Let's talk about this. The plan for the month of July, as they say in Georgia, is from here to here. Do we get that? No. Sorry. Could I say? It's not me. That's what the pivots predicted. But bottom it found, you don't need to be a rocket surgeon to realize it's a triple bottom. There's something obviously going on here. That's what was supposed to happen for July. We're at the end of the month of July, so obviously it didn't happen. But it made a nice move up like we thought, or like it should. Got pretty close to this resistance here. Okay, retraced, which is pretty normal. I would have preferred that it stayed above this gray area and above the monthly central. But nonetheless, it's now trying. And here's the new target. It's a little more conservative. You can see inside that, I was hoping we'd get a breakout and an extension. Okay, great, cool, great. What did we talk about yesterday and the day before? Well, if you were a cheeky monkey, you were trying to front run August pivots in the month of July, where could you do this? This would be great. This would be a great start, is what we talked in the past. Okay. And I think we even talked about this on Friday. It's Tuesday now, on Friday, right? This blue line that I just, right? We may have talked about last week. We certainly talked about it yesterday, where that is the weekly M2. And what that means to me is if I'm already a bull, aka I've had this pointed up for a month, knowing that July is not a breakout month, I'm pretty sure we would have covered that, although I was in school most of the time. But we should all know that July is not a breakout month typically. But anyways, moving into August, if you're still a bull, on a weekly basis, you certainly are looking to buy a WM2. That's right here. And you might call this a double bottom, pretty close to support. But if you're still hoping, right, if hope is still the basis of your strategy, you're trying to get that up here this week, but up here next week. And in fact, not just next week, next month. So you need to sort of start building that up, right? Start building the foundation. So we've made it to here, which is the first level of reasonable resistance. The next one really is supposed to be about here. Okay, so Wayne, what do you mean about front run? You're in it before it happens. So you say, I think it's going to double bottom at this line, so you're in it before the line. Remember, most people don't have these pivots until Monday. You had them on Friday and Thursday of last week. So on Friday and Thursday of last week, you could be trading next week's pivots, which are now this week's pivots, but you're in it before everybody else. Okay. So anyways, here's what we're hoping for now. If you're a bull, up, down, up, something to that effect. Maybe not those exact prices, but something to that effect. Okay, and now I'll back out and I'll show you why. Okay. So check this out. Let me give my microphone check one. All right. So that's the weekly trade here. The weekly trade's just this bottom to this top. Cool. Now, that's the WM2. This is August's monthly M2. Oh, snap. And that predicts a move to this price. You can tell this because I've already drawn it for you. You're welcome. We just happen to have done it early last week. I know, right? Okay. So now what you're trying to do, let me change colors and I'll use a black arrow. So now what we're trying to do is fold the monthly and the weekly plans together. So this is the weekly, this is the monthly. They seem to be the same thing, which is good, which is why we talked about it last week. Cool. So let's say we get this. Wouldn't that be fantastic? That would achieve the aggressive goal for this week. That is this week's trade plan. So what do you think? Do you think people are going to take profit at the monthly M3, weekly R2? What's the probability the market dips here or even reverses? What's the likelihood, even if this rallies for 2 or 3 or 4 days straight, it stops immediately at that line? What's the probability? It's absolutely going to happen. Absolutely going to happen. $112%. Okay. Okay, so it's going to come down, but you're a bull, so you think it's going to make a higher high. Okay, and that's what we're thinking. Oh snap, that's basically this trade plan. Yeah, but it's more likely to happen in August than it is in July, based on seasonality. So it's still the same trade plan. It still works out. I'm just trying to teach you how to fold in your weekly trade plan into your monthly trade plan. Okay. In fact, let me kind of redo this. It'll probably this way, this way, this way, this way, and then hit. Okay? Which again, it's the same trade plan that we've had for weeks. It's just taking longer because of summer. Remember, that's the general trade plan. That's the bias on this one. Okay? We're just going up. So if we looked at this on a daily, okay, that's all we're doing on a daily. So we're just working our way up. Okay. You just have to chop away at this. Chop away at this. It's not surprising that that's resistance, is it? Cool. So that's our friend Kiwi. Or Aussie, sorry. That's our friend Kiwi. You are not alone. Once again, traders are front running this move. By the way, do you think this has anything to do with the Bank of Japan meeting we've talked about for the last several days? Hmm? What do you think, guys? Does this have anything to do with the Japanese central bank's meeting that we've discussed for several days now? Two people say yes. What about everybody else? Okay. Yeah. So what is your response to this? Have you changed your bias? You changed your aggression level or your confidence level? Or you, Is this part of your fundamental analysis of the Japanese yen? Okay. So if you don't know what's going on, you need to write this down. Wayne said something about the Japanese yen, and it had to do something that the Bank of Japan has recently done. Okay. And John's is not really a yen trader. That is the silliest thing I've ever heard, John. So please be open-minded. Okay. It's like, I mean, serious, John. I know you're a good trader and you've been around, so, and I'm not picking on you, but like, that is literally ridiculous. So yeah. So please be open-minded, because for much of the professional Forex world, it's all about the yen. Being a Forex trader means trading the yen, right? So when you're like, but I don't trade yen, you're like, what? Right? So anyways, and I know you're open-minded, so I'm not gonna bug you anymore. But just like, holy smokes. Wow. Anybody else exhausted? Oh my God. So anyways, several of you, several of you all have traded with me for many years, right? I know you are. I know you are, John. For those that have traded with me for 3, 4, 5, 6, 7, 8, 9 years, 10 years, is it my general operating procedure to buy yen pairs in August or sell yen pairs in August? 1, 2, 3, 4 people have said buy, 5 people have said buy, 6, 7, 8, 9. Looks like everyone's saying buy. Cool. So could this maybe be important to us? Okay. Now, this might be early, but we don't know, because this one is primed by the central bank meeting. Typically, we don't expect a serious change in economic policy by the Bank of Japan this time of year. We were worried about this year. So anyways, this year is different from the last. Okay. So anyways, what I'm trying to get through to you is this might be important. We talked about it for several days, that it was coming up. And now this yen pair is up, 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 this yen pair is up. Now, it might be a coincidence, but this could possibly be technically and fundamentally important. So, I don't know, wake up. Now, what I would like you to do is you would say, well, I think he just highlighted that because it could possibly be important. So I'm going to like change my behavior. I'm going to really look into this. I'm going to look at this. I'm going to dig through the news and read what occurred. And I'm going to think about this. I'm going to keep an eye on this. I'm going to measure and test, and I'm going to really pay attention. The other 95% will just skip over and keep doing what they're doing. Okay. So anyways, there you go. Yeah. Cool. CAD yen. Oh yeah, so this was Friday. I think I have to go into a 15-minute chart for this. Friday, you can see I marked this. Try and get this over. It's drawn this way because these pivots hadn't happened yet. And I think I need to turn this off. All right, so we were here Thursday, maybe Friday. I think it was Thursday of last week, just by how steep this was drawn, because to the right side, we barely even had this week's pivots yet. So I think it was Thursday of last week, we had this coming down to this price. Can anyone do that? 84.70, right? And what kind of pivot is that? That's a buy pivot. Ciao. Sweet. Sweet Caroline. So if you believe I am a bull on these pairs, it's so wonderful. Very neat. Very cool. Wow. Look, I even have the target highlighted. No, John, you don't have a problem with yen. Yeah. We'll fix it. So don't worry about it. Erase your past. I wouldn't make a big stink out of it if it wasn't important. So I'm going to teach you how to trade the yen, and that's that. You don't have a problem with the yen. You've never traded it. Or never traded it properly. Good. We'll fix that. It's not a problem. All right. What are we going to do? Cool. Let's see. Stuck on the bottom, huh? Yeah, I'm super not excited about this. One thing to talk about is the way that the week has started on this. It has started aggressively bearish. Okay, so this is an aggressive bear short. Even if I was a bear, I would like it to come up and then sell one more time. But eventually, it's got to break eventually. Should you sell it low near this bottom, even if you're aggressive? I'd probably say no. Okay, so then let's drop into it or zoom in a little bit here. Okay, so even if you're a bear, you should be conservative. Now, if you're using price action, this is a sell for sure, right? Lower low, lower high, lower low, lower high, lower low, lower high. So you could sell this. Don't be too crazy, you know, especially if you're using the 5 minute to enter. I mean, you could totally sell that, right? But that's really short-term trading. That's skip scalping and all that kind of stuff. On a bigger time frame, however, on a bigger time frame, actually, changed my mind. I was going to say we're probably in a buy zone. Actually, I don't think we are, unless you're trading that and the bigger thing. You know what? I guess, look, based on weeklies, if you want to keep selling this, you have permission. I was gonna counteract that. I was gonna give you kind of a different point of view there, but that's what the pivots tell me. I'm very conservative about this. I think there's a lot of support down here, but if you're trading like a 5-minute chart or a 15-minute chart, and you're keeping your eye on this, you're picking up 25 pips at a time kind of thing, you can still trade this price action, but just recognize that this looks like support on that time frame. Then you back out to an hour, and then it looks like support on that time frame. There's a weekly S down here. There's a monthly S down here. You're selling, and the market is falling. It's a bit aggressive for me. Just so I was kind of like this before too. I kind of just want to stay away from gold. I don't know. It's not a good buy, and it's a dangerous sell. So I mean, I don't know. Let's go back to the original thought. There's got to be something better to do with your time and your money. I guess we'll do oil. I know lots of pretty colors on this one. So we have an uptrend channel and a downtrend move. So you can see I have this whole gray area as a possible drop zone. And it's possibly a drop zone on a monthly basis. And at least on a 4-hour, it's fallen ever since, right? So I have it falling off of this area, which is 69.75. It's actually 69. You can see it. 69.75. Yeah. 69.75. It can go a little higher. Wouldn't bother me in the slightest. In fact, I'd almost want it to go to 70.50. So maybe one more move up and then drop, or it'll hit this and drop. But if you wanted to be a bear, it's setting up for you. It hasn't set up for you yet, but it is setting up for you. Wait, do I have this as a buy yesterday? I do, don't I? Huh. I think yesterday I have it going up and then falling. That's interesting. Looks like I have it here. You either buy it here or here, and then off it goes. Now we're up here. Now you got to start setting up the drop. I don't know. Anyways, cool. Yeah, it's going to rise and then fall, is what I'm trying to say there. And there's my mouse. Holy smokes, I'm ready to take a nap. I'm telling you. Holy smokes, my eyes are getting all watery. I can't even control my mouse. What's going on with my mouse? Oh yeah, okay, so I told you about the drop yesterday. Cool. Right on. Looking at this chart, again, this is pretty straightforward stuff. This is a buy zone. And that up here is a sell zone. But you can see you never really go to sell. That's the buy zone on Sunday afternoon, Monday morning. The target on that is this red zone. But you got to be worried about this because, you could certainly argue that we're range bound. Okay. And you're going to stay in the range forever until it breaks. So you should just assume. So you can go back to last week, like forget this X. This X could be your entry. Right? Look at this. So let's get rid of this one. This is maybe sort of backdoor type stuff. Oops. Okay. All right. Would you agree that this is the gray line is pretty obvious support at the bottom? And the gray line is pretty obvious resistance at the top. Okay. And if so, the way you trade this is you assume support's going to hold forever and ever and ever and ever. You're going to assume resistance is going to hold forever and ever and ever. But when it breaks, then that's significantly important. So it's going to hold, meaning it's not going to break until it breaks, but you can't assume it's going to break, because if you assume it's going to break, then you would not believe we're in a range-bound market. So think of it as just a trend this way. Okay? It's just a sideways trend. How do you trade a sideways trend? Buy at the bottom, sell at the top. Okay? Sell at the top, buy at the bottom. Sell at the top, buy at the bottom. Sell at the top, buy at the bottom. And you do this forever and ever and ever and ever and ever and ever and ever and ever. You should be able to assume the break too, based on things like seasonality or fundamental changes or something. So we're in the time of year where this might actually occur now. But you can't assume it's going to happen, or you shouldn't assume it's going to happen. You should take your profit here, be happy with that, and if it does break, then set up the next trade plan, which would be buy the roll reversal, which is just a breakout strategy. Okay. There was a trade strategy that people were taught, I don't know, 100 years ago. It seemed like everyone had this strategy in mind. They would wait for a break, and they'd have to wait like 2 or 3 full candles to close outside of the support or resistance after the break. And then they would buy, so you get like a candle, a candle, a candle, and then they would buy, because this clearly confirms you're outside of here. And that was the strategy. That was how to trade a breakout strategy. And this was absolutely commonly known by everybody in the market when I first started coaching, but I'm self-taught, right? So people started asking me about these things, and I thought about it. I'm like, that's the dumbest thing I've ever seen. I've never observed that in the market. I'm like, I find that really weird, because I've been observing the market for years, and I've never seen that to be the case. And so I looked into my trade history, and sure enough, I found, like, if you got a break and then you got 3 solid candles outside of that, all it did was put you in. So now you'd end up buying here, and sure enough, it would collapse. And this is where I found most people lost their money, buying high after a break. And then sure enough, as soon as they took their loss, then it would continue in that strategy. Oh yeah, you remember that? That's what you were taught, trading stock. Maybe it works for stock, I don't know. But I found over the years, and I remember how I learned not to do this. I mean, I was never taught the breakout like that, but I remember teaching myself how to take this situation. Because remember, again, I'm self-taught. I remember because I hated these pullbacks. I hated being down -30. I just hated it, especially, because the market does this a lot, right? And I really, really hated it. I'd get stomach ulcers over this kind of stuff. And then eventually it would do what I thought it was going to do. So I learned over the years, in situations like, if you have a sideways market, you just have to assume it was forever. Because most of the time, the trend, you know how they say the trend is your friend? In this case, I mean, it means bet on the trend. Well, if the trend is sideways, like bet on the trend being sideways, because it's probably going to stay sideways because it's a trend. So over the years, I just found like, yeah, take your profit here, take your profit here, take your profit here, take your profit here. Most of the time, that's what's going to happen. But if it breaks, don't jump on the trade like, oh my God, it's breaking. Because that's how a lot of people trade it. They're like, look, it's breaking, it's going to go. Very often, you do get a big green candle here. But why do you suddenly get a big green candle here? Because everyone's buying? Why do you get a big green candle after you break if you break a range to the upside? It stops. It's people getting out. It's not people getting in. So who's getting out, bulls or bears? So bears are trading, not bulls. So what do you think if bears are trading and bulls are still on the sideline, what do you think they're going to do at the next level of resistance? Who's going to trade, bulls or bears? Remember, there's no evidence of actually buying, even though the market's going up, even though there's a giant green candle, there's no evidence of bulls actually buying. So bears are the only ones making trades. In this case, they're getting out of trades, goes up to the next level of resistance, and what do you think happens? Bears trade again, because they're the only ones trading. So I found that on breakouts, even with giant green candles, even 2 or 3 in a row, all you're doing is sitting there, stops. When you get to the next level of resistance, the whole thing collapses on you again, and all of a sudden you find yourself down minus 30, minus 50, minus 80. Ugh. And then bears are now scared because they just lost some money, right? So it comes down to here, and now they just picked up 25 pips, but they just lost 25 pips, so they're at their magical break-even number. And now bulls get in on this move. And I just found, you know what? Skipping the minus 30 was so much more important to me than possibly making money on this breakout. So I know how I was taught, because that was me. Because I just absolutely hated that. And the most important thing is I skipped the pullbacks. Absolutely, because honestly, it physically bothered me. And that's the honest truth on, how I learned to trade a breakout, through punishment. So it's kind of funny in these situations that, it's good to highlight them so that you don't have to go through all of that, right? But this is the best entry if you're a bull. So even if you bought here, this is fantastic. Take your profit. If it breaks out, don't buy it. Let it hit the resistance. Let it come back. And then look to buy the roll reversal. This old resistance now becomes support. And then be a little flexible. Also in this area, look for psych levels. Also in this area, look for weekly pivots. Also in this area, look for monthly pivots. So on and so forth, and fold it into the roll reversal idea. And basically, you're buying a dip after a breakout. Okay. That's how you trade. Sister. Brothers and sisters, pump up the volume. All right, so I'm spent. I don't know what time it is. I am sick of being sick. The problem is these days is like my throat is feeling better every day. And I am coughing less every day. But what happens is you've been sleeping for 2 hours, and all of a sudden, right? And they're like, oh, I think, and then you're done, right? Right? And you're done. You're like, oh my God, it's midnight. Then you go back to sleep and you get your sleep. And then 2:30 in the morning, and it wakes you up again. You're like, oh God. So my wife coughs every 10 minutes all night. I only cough every 2 hours now, but I still haven't had a decent amount of this. Oh. So anyways, guys, 10 minutes US CPI, you want to do I'm tired, man. So my focus is to get better. And PCE, that's good stuff. You don't need me to trade that. But remember, what is inflation? Sorry, what is CPI? It's consumer-based inflation, so that's important. What's PCE? Consumption. So how much are consumers buying, and how much are prices going up? And adjusted for prices going up, which is CPI, how much are they actually consuming? Now, people will tell you the Fed is mostly interested in inflation because then they'll adjust interest rates to combat inflation. However, that's not necessarily true because the Fed doesn't use CPI, they use PCE. So they're more interested in consumption side, and consumption is what goes into GDP because GDP is consumption plus investment plus government spending plus net exports. So it's what is it, the GDP, and that's why the GDP number, I've been talking about that being over 4% for several months, but I could easily tell you that was going to happen because you have PCE data. Yeah, it already occurred. You have inflation data. It's already occurred. Okay, but anyways, so I will keep doing my best to get healthy, and I will see you tomorrow. Please open an account at TradersWay, would you? And I will see you guys tomorrow. Thank you very much for being on my team. You get me out of bed when I would rather be sleeping, but I can't let you down because you're important to me. So I hope you know that. I'll see you tomorrow. Cheers. I just got to figure out how to turn this off and then the new method. How do you, this one?